Everybody. Today is Monday, May 22nd, 2023. I'm doing something a little bit different with the internet today. So, feedback today especially is appreciated. I know the last couple weeks have been a disaster with my computer. Maybe not a disaster, but it hasn't been great. Did something different today, and I hope the quality is better than it was especially last week. I was having some real computer issues last week. So yeah, for the moment on my end, the VTF does not look blurry, so that's good. See if it stays that way. Nice. All right, I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed by me through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same as last time, except I added on plug and KRE longs overnight off of today's trading, which I'm happy to talk about. Let's take a look at some charts. Let's take a look at the market. SPY's relatively flat here, and that's after a small uptick, I think, from the close. Up 0.06%. There's nothing to talk about. The Q's up 0.4%. Not bad. This is what we need to talk about most. Is this IWM up 1.3%, getting the rotation today that I've been looking for. Maybe not in every sector that I was looking for, but broadly got the rotation that I'm looking for. Broadly, that's bullish. Helps improve the breadth. And let's take a look at these charts. Let's start with the SPYs. There's nothing to talk about here with the SPYs. Real digestion day. This downtick off that headline was frustrating. I can talk to that in a minute. Good, Ben. 10:05 here is when that happened. Outside of that, though, pretty much a sideways day. SPYs struggling with this 420, starting to establish that as some resistance. We upticked above it early, fell back down. We tried to uptick it into the close, fell back down. So net, at the end of the day here, SPYs are pretty much flat, but we had last week, Wednesday, Thursday, a pretty big breakout here in the market. So we have a small amount of extension, and the sideways price action is helping to digest that. Is it an inside day for the SPYs? To the penny. Inside day for the SPYs to the penny. I didn't realize that till this moment. So perfect little digestion of yesterday's breakout. We're continuing to hold above S&P 4200, and that's exactly what you want to see if you're bullish on this market. But not just seeing the S&P hold above 4,200 bucks, but also seeing broader participation start to come in from the market. Because like we've been talking about, these Qs have been extended, and the Q still had a decent day today. It's more or less a consolidation day, and again, early uptick in the beginning of the day, sideways pretty much all day, but still up 0.4% on the day, maintaining this little degree of extension. So here we are at about 338 or so in the Qs, with the ADMA at about 332. So as of the close today, we're still in that kind of no man's land. That's $6 worth of extension from the ADMA on the daily chart. I've really described that as no man's land from a risk-reward perspective. Difficult to buy because of the degree of upside extension, but at the same time not so extended that you can feel confident on the short side of the market. And finally, the IWM. So the IWM, and I must have a false print on my chart. There we go. The IWM was most disappointing to me on Friday. Really, we had good leadership from this. I think like last Wednesday, last Thursday was okay. Friday we had the gap up above 178. I was like, oh boy, this could really start confirming the market and really help hold us above 4,200 for the SPYs. This is exactly what I'm looking for. And we sold that off. It wasn't like a disaster. We still closed above 176. Closing below 176 or closing below the ADMA on the daily chart probably would have been another disaster or another failure of an up move here for the IWM. But in my back of my head on Friday, and I lost a little bit of money trying to be long the IWM on Friday via the TNA. It wasn't too bad. At one point I was down a good bit in it, but I was able to kind of trade my way out of it to a smaller loss. So I was pretty disappointed. But I remember after the close, I was like, why was I so aggressive with the IWM? on a day 3 on OPEX in particular, because that OPEX price action is always so wacky. So what I was thinking this morning when I saw that the regional banks were trying to be strong and the IWM was showing relative strength pre-market was like, okay, Friday's definitely a day to take note of the fact that we couldn't hold any of these key levels and that the IWM was as weak as it was. But maybe, just maybe, some of that can be attributed to OPEX, and let's see if this relative strength from this morning can actually hold and follow through, because I still think that the most bullish thing that could happen right now, while the Qs are a bit extended to the upside, not dramatically extended, but a bit extended, and some of those individual names, Google comes to mind right away, that are still like really pretty extended to the upside. When I'm seeing that, if I'm trying to be bullish, I just really want to see improvement from this IWM, from the RSP. I want to see breadth improve. I want to see some of these other sectors improve. I want to see that KRE. I've been saying this over and over and over and over again. The key to the S&P is the IWM. The key to the IWM right now is the KRE, and we got it. So IWM, really strong day today. Retraced all of Friday's sell-off day, even ticked above Friday's high, though didn't quite close above it. We're right back into this broad resistance zone for the IWM of 178 to 180, and I've been saying it for months now that we've been in this range. If this IWM can really clear above 180, it's been 170 on the downside and 180 on the upside. If we can really start clearing and holding above 180 on the IWM, I think it really starts to confirm the breakouts that we're seeing in the other indices, and then things continue to improve. And that's kind of just the state of the market right now. It's very hard to be technically bearish when the IWM is improving as much as it is, when the S&P is getting above 4,200, when the Qs are leading, but every time they get too extended, we begin to see rotation. You start to lose that bearish argument of, well, breadth is 7 stocks, and these Qs are eventually going to roll over and fail, which is an argument that we, by the way, as a team, have already debunked, because we've shown over the course of the last 10 years, you've got plenty of episodes of breadth being poor in certain situations where those leaders roll over and the market stays weak, in certain situations where the rest of the market keeps up. And I don't think that looking at breadth as in its own universe is enough to say that this rally is destined to fail. But if everything else starts to improve and you're trying to be bearish, then you don't even have that to hang your hat on. So certainly a lot of improvement here. This is exactly what I wanted to see. And as far as individual sectors went today, what I really wanted to see was regional banks, financials, energy. I could put growth in this list also. Really start to go to see kind of broader breadth improvements, and I saw some of that. The KRE was awesome today. It was a difficult trade, but it turned out to be one of my better names. It closed up 3% on the day. So KRE closing above $40, which is a key level. Gapped up above 40 on Friday, but failed all the way down on the IWM this week. Today, getting a close above 40 is solid. 42 is still the big level for KRE, maybe more similar to the IWM 180. So we got to see if this KRE can get back above 42, and if IWM can clear 180. But definitely got what I was looking for from regional banks. ARC had a massive day today, which, again, this is just a quick ETF I like to type up just to get a broad sense of what growth stocks did. ARC up over 5%. ARC closed above 40. 40's been a really big key level for ARC that we've been looking at for quite some time. It was able to trade above it a bit in February before coming right back down. But you can really see that ARC 40 has been a level going back to like September, October of last year. Really probably September of last year. There's been a big key level for a long time. Closed above $40 with really good volume. And it was just like growth stocks left and right were just massive. Some of the ones I've been focusing on, Roku gave a pretty good inside nut today, potentially attempting to break this downward channel that it's been in. That's pretty good improvement. I know some of you guys were all over the Shopify early. Shop rolled over from its close a bit, but still Shop up 3% on the day, even after rolling over a little bit into the close. And then there was just other ones. Path is one that I've been focused on for a while. This had a big day, up 7%. AI had another big day. Josh called this one out right at the open. I want a little bit of a bigger pullback on the daily chart to get back involved. So that didn't happen, but AI up over 10%. Carvana, which I am involved in, maybe not a massive day, but I mean, it's 6.5%. But just this thing's been having such big days recently that today's daily candle almost doesn't even really seem like that much. Plug had a little bit of news this morning. I don't know if it was the news that got this plug going or the fact that it was just a breakout and that growth in general was trading really, really well. Either way, shout out to Elliot for bringing this one up in the morning meeting because this one made me a good amount of money. This stock has been disgusting overall, whereas a lot of growth stocks are up pretty significantly off of their lows. Plug has not been, just been getting absolutely brutalized, but had a little bit of news this morning. Gapped up right in front of that $8, so it gave you the entry execution if you're looking for that through 8, and for me that turned into being a really good name. So growth was really strong. But if you look at like XLF was disappointing. XLF here at the end of the day up 0.2%. This is one of the areas I wanted to see also moving with the market with the IWM improving. JP Morgan negative on the day, down 0.9% today. Pulling back to the EMA though, so it was pretty extended after a decent run, but intraday sell-off from 41.50 down to 138 with the market being as strong as it was. Really disappointing from JP Morgan. Bank of America, which has been a focus for me, just a nothing burger of a day, up 0.8% in the day, so relatively strong to the XLF, but just honestly nothing to talk about. And then XLE also disappointing to me today. This is the other area that I wanted to see if it could run. Pointed to that chart from Pat's note this morning that was kind of like a sentiment type of chart that I guess it was actually more based off of positioning that showed that oil positioning is like historically bearish right now. Seems like it's almost a crowded trade to the short side, which is interesting to see that data because of just how it seemingly crowded this thing was actually getting to the long side in 2022 with the big run that it actually had. But XLE 80 is really important. It was ticking up above 80 at 3 o'clock and was looking okay. That 80 is a real trouble spot for it. And this last hour of the day, they just wrecked this XLE down for whatever reason and closed it negative. So I didn't get everything that I wanted to see today as far as strength, but I broadly got what I was looking for. IWM leading the way, KRE leading the way, growth waking back up, and it's pretty good. Notably weak today, which I don't look at these sectors as often, consumer staples, XLP down 1.5%. It looks like a massive red bar. It's only 1.5% because XLP doesn't tend to move very well. But XLP super weak. XLU kind of weak also. I guess not as bad as XLP. XLU closed flattish on the day. But just some notable areas of weakness. I mean, XLP, XLU, they tend to sell off as risk turns on for the market. So notable to see like XLP having a little bit of a sell-off with growth names actually catching up. So yeah, today was definitely a rotation day. Definitely a rotation day with big tech taking a break, which it absolutely needed. Take a quick look at some of those charts. I'll type it up Google. It doesn't look like big tech took a break. But if you type up Amazon had a further technical correction down to the ADMA on the daily chart after some interesting upside extension. Apple was very boring today. Apple got downgraded this morning, spent a lot of the day just kind of sitting around that 174 area, which is a key level. It couldn't really ever wake up, but it also didn't really sell off in a major way off of that downgrade. Meta was one of the interesting ones. Meta got fined, I think, $1.2 billion. Which is just not enough. It's just not enough money. You gotta find them more than that, to be honest. Because $1.2 billion, John Lee, I think it was you described it like a speeding ticket for Meta, and that's been, so for some of these big companies, that's been the business model for a long time. If the crime pays, then do the crime, right? If you can make more than $1.2 billion by doing that crime, and then you're going to get fined for it $1.2 billion, it's just not enough. So Meta was actually really strong early on before rolling over a little bit into the close. So I think we were pretty on point. The Microsoft was nice off the open. I think this Microsoft we mentioned in the morning meeting today is like the one tech stock that maybe you could still feel comfortable buying today. Really nice inside and up for Microsoft for some continuation. I guess quick look at the semiconductors. NVIDIA digesting gains. It looks fine. AMD. Wow. Wow, that's a heck of a turnaround in AMD. These semiconductors got hit early on the Micron news, and Micron held in great also. So I think overall, the morning meeting call today was really on point. Continuing to avoid these big tech stocks, focusing on some of these other sectors, focusing on the IWM, and again, I got a false print here in the IWM, but it was really on point. And for me, you know, KRE ended up being pretty money, and Plug ended up being pretty money. The only thing that was annoying today, which really frustrated me for a moment, even though I was able to trade out of it, was that fake news. They should really, I'd be curious to know, like, they should do an investigation on that. Whoever posted that, I don't know if it was just some idiot out there, you know, some account that was just posting nonsense, or if it was actually someone trying to manipulate markets in that moment, because it was kind of a scary situation there. And I discussed what I did, and it ended up not costing me too much money, which is fine. You know, when you buy insurance, you want to lose the money, really, for the most part, right? It's almost going to be preferred. But when that news hit about the Pentagon explosion, it seemed, as soon as I saw the picture, I was like, oh, I don't think that picture looks real. And then very quickly we saw there were no other pictures. There was, you know, nothing else really coming out about it, and the White House was just acting normal. But the second we saw that, you know, I shorted enough TQQQ to hedge out my entire long portfolio. And then I was able to work out of it. I got out of a lot of it into this down tick, and then I kind of, you know, I looked at the position and I was like, I don't want to be in this position if that news isn't there. But with the Qs relatively weak and in that kind of no man's land, I felt I could sit on the position a little bit and try to work it, which I did. So I ended up liquidating the position near the close for like a very, very small loss. It turned out to be more or less break even. And yeah, I guess that's pretty much all I got. So happy to answer any questions. Happy to look at anything you guys want to take a look at. Glad my internet's working better. I could probably even turn on the YouTube at the same time like I used to do. Let's see if there's any questions in there. Anybody have anything? We got Zoom here after hours. Zoom pulling back a little bit. The Zoom numbers look great. I just don't understand the company. I don't use Zoom. It's less convenient, I think, than to use like Google Meets, which is already into my calendar. How come I prefer to trade Labu over XBI? I think from a trading vehicle perspective, I like Labu, even though I will trade both because it's cheaper. So I like to just be able to have a lot more shares, and more shares for me means more ability to be able to game plan. More ability to be able to game plan tends to mean that I can make more money from it. The downside on Labu is that if you're involved in it for more than, you know, a short swing trade or a day trade, that the time decay really starts to rot against you a little bit with that ETF. And you can just see it if you compare daily charts of like XBI versus Labu. Yeah, especially if you look back. If you look back a little bit more historically, like what was this high on February 17th? It was up there. I bet XBI is probably at that. Yeah, see, look at this. If you go back to the high on February 17th, XBI is trading above it. Labu is trading below it. That difference is entirely from time decay. So, and that's just from, you know, February, from mid-February through mid to late May here. And you can already see that it's underperforming the XBI. So you got to remember whenever you're involved in these leveraged ETFs that you're not going to be getting, especially if you're holding it for a period of time, you're not getting 3x performance over XBI. You're getting 3x less time decay. So That's generally why I like it, though. I generally prefer the cheaper price. It still trades pretty well as a $7 ETF because it's leveraged, but the cheaper price means I can have thousands of shares, like a lot of thousands of shares, as opposed to a smaller position that I would have with XBI, and that just gives me more game planning flexibility. So that's the short answer. From Dave S., how much weight do you put into stocks approaching all-time highs after a bear market has a resistance level versus more normal resistance levels? The same. A resistance level is a resistance level. Anything that's approaching all-time highs right now is showing relative strength. That would be something I would take note of because the market's not near all-time highs. If that stock is, you absolutely have relative strength. But outside of that, I don't really put any extra weight on it. A stock trading through all-time highs, it's at all-time highs, means more to me because it means that that stock has zero resistance ever. There's never anyone that has ever, previously bought that stock at that price who can then act as a seller because it's getting back at their price. Stocks tend to trade much cleaner in areas of space, and an all-time high is going to be an area of space. From Jared in the YouTube, thank you, Scarlett. From Jared in the YouTube about my position in WE. Traded around and mostly thoughts on WE after the past few weeks of relentless selling. Fundamental case and technical case for a snapback. Yeah, so WE has been completely garbage. It's being hurt further by a few main things. It's being hurt further just by the commercial real estate crisis, if you will, that's going on, though they've tried to spin that in a way that's positive for them. It's been probably particularly hurt by tech layoffs because tech companies and tech hiring is a big source of people who are going into these WeWorks. It seems like they have created some really good partnerships. They've cut a ton of costs. They also just lost their CEO a few days ago, which has created this next level of selling from like 40 cents down to 20 cents here. Because that CEO was, I thought, a really solid CEO with really good background. And he's gone. And I don't think that they even have a CEO right now. They got some interim CEO. There's some weird stuff going on with SoftBank converting their debt to equity, or at least some of their debt to equity, that increased the float as well. But at the same time, they put something in place that made it difficult, if not impossible, for the company to get bought out. Because I would honestly think that someone would come in and buy the stock at this market cap. I think the market cap right now is probably like $400 million or something like that, down from what did it try to IPO at back in 2018 or whatever, 60 billion. So I would think that someone would come in and buy it, but there's like a poison pill against that. I almost wonder if SoftBank is kind of up to something here, because why would they convert all that debt to equity at $1 and then let it come down to these prices unless they want to be the company that comes in and buys it? So at this point, I don't know. The thing's complete and utter garbage. I don't talk about it because there's no technical setup to actually buy it. If you want to be involved in it, you're long versus zero, which is what I am, and I've just been sitting on a core position versus zero for some time. That's continued to bleed out against me. So it is what it is. I'm fine with the loss if it's a zero. So the fundamentals are, the fundamentals, you can point to the cost cutting, you can point to the fact that they do have a path to profitability, but at the same time, the CEO leaving is definitely no good for the company. But I would think that would be built into the stock now at this point, because again, he was a really good CEO, and there is no technical case. There's no technical case to be made. Stock's at all-time lows. It's straight down. Yeah, there's no technical case to be made. I usually don't like being involved in these cheap things, but it's been more of a fundamental thought process that I've been in with this thing, and I'm planning on going down with the ship with it. So we'll see how it plays out. What else, guys? Anything else? Guys and gals? Pretty good day today. I'm pumped. I had a really good day today. It was one of my better P&L days in a while. Even if I didn't see exactly what I wanted with all the rotation. I wanted more out of XLF and XLE, but everything else today was great. It's exactly what we were looking for. My day trading was really on point, so overall pretty happy today. I hope you guys are as well. Hope everybody had a good day, Monday morning. And I guess that's it. So No one's got any other questions. So have a great night, and I will see you all tomorrow.